Hello, friends. Friends, if you're preparing for the real estate exam and you have any doubts about it, or if you're just not feeling confident about how well you've prepared or how you'll do on the test, then I'd like to ask you to please watch this video. And friends, if you haven't subscribed to the channel yet, make sure to subscribe and hit that bell icon. You'll find plenty of other videos on this channel that'll give you so much practice that you'll be able to pass your exam with ease. All right, friends, let's get started with the video.
Question number 1. A buyer pays the seller $8,000 for a 30-day option contract to purchase a commercial property. During the option period, the seller receives a substantially higher offer. What should the seller do? A. Accept the higher offer immediately. B. Return the option money and cancel the agreement. C. Honor the option until it expires or is exercised. Increase the purchase price without the buyer's consent. Correct answer. C. Honor the option until it expires or is exercised. A valid option contract keeps the seller's offer open for the agreed period. Question number 2. A purchase agreement contains an enforceable liquidated damages clause. The buyer breaches the contract after all contingencies have been removed. Which statement is generally correct? A. The buyer automatically recovers the earnest money. B. The seller may recover the agreed liquidated damages if permitted by law. C. The broker decides the amount of damages. D. The contract becomes unenforceable. Correct answer B. The seller may recover the agreed liquidated damages if permitted by law. Liquidated damages establish a predetermined remedy for certain contract breaches. Question number 3. A homeowner grants an agent authority to sell only one identified property while retaining control over all other affairs. Which agency relationship exists? A. Special agency. B. Universal agency. C. General agency. D. Dual agency. Correct answer A. Special agency. A special agent has authority limited to a specific transaction. Question number 4. An investor purchases an office building for $1,240,000. The lender finances 78% of the purchase price. How much is the buyer's down payment? A. $223,200. B. $967,200. C. $248,000. D. $272,800. Correct answer D. $272,800. A 22% down payment on $1,240,000 equals $272,800. Question number 5. A title examiner discovers an unreleased mortgage recorded many years ago, even though the debt appears to have been paid. What issue most likely exists? A. Break-in possession. B. Inquiry notice. C. Cloud on title. D. Adverse possession. Correct answer C. Cloud on title. An unreleased recorded interest may create uncertainty regarding ownership. Question number 6. An appraiser determines an apartment building has lost value because a newly constructed airport has significantly increased aircraft noise. Which appraisal principle applies? A. External obsolescence. B. Progression. C. Contribution. D. Conformity. Correct answer A. External obsolescence. External conditions outside the property may reduce market value. Question number 7. A broker shows a buyer several properties over 3 weeks. Another broker later writes the successful purchase contract. A commission dispute arises. Which doctrine is most likely used to resolve the dispute? A. Statute of frauds. B. Procuring cause. C. Equitable conversion. D. Subrogation. Correct answer B. Procuring cause. Procuring cause determines which broker's efforts produced the completed transaction. Question number 8. A buyer submits a completed mortgage application on Monday. Under federal requirements, by when should the lender generally provide the loan estimate? Before the appraisal begins. B. At closing. C. Within 7 business days. Within 3 business days. Correct answer D. Within 3 business days. Federal rules generally require a timely loan estimate after receiving a completed application. Question number 9. A title search reveals a properly recorded utility easement affecting the property. Even though the buyer never reviewed the public record, the buyer is legally considered aware of it. Which legal concept applies? A. Actual notice. B. Inquiry notice. C. Constructive notice. Equitable notice. Correct answer C. Constructive notice. Proper recording gives constructive notice to future purchasers. Question number 10. A developer completes roads, sidewalks, and utilities for a new subdivision. Before the local government accepts the improvements, it requires financial security, guaranteeing unfinished work will be completed if necessary. What is commonly required? A. Blanket mortgage. B. Performance bond. C. Net listing agreement. D. Title insurance. Correct answer B. Performance bond. Performance bonds help ensure required public improvements are completed. Question number 11. A homeowner signs a listing agreement giving one broker the exclusive right to market the property. Before any buyer is found, the homeowner hires a second broker under another exclusive listing. What is the greatest legal risk? A. Automatic cancellation of both listings. Potential liability under conflicting listing agreements. C. Immediate transfer of title. D. Loss of homestead protection. Correct answer B. Potential liability under conflicting listing agreements. Multiple exclusive listings may expose the seller to contractual liability. Question number 12. A buyer files a lawsuit asking a court to remove an invalid recorded claim that prevents clear ownership of the property. Which legal action is being requested? Quiet title. Action B. Partition. Action C. Foreclosure. D. Condemnation. Correct answer A. Quiet title action. Quiet title actions resolve disputes affecting ownership or marketable title. Question number 13. An appraiser concludes a residence is worth more because nearby homes are larger, newer, and well-maintained. Which appraisal principle best explains this increase? A. Regression. B. Substitution. C. Progression. D. Contribution. Correct answer C. Progression. Inferior properties often gain value when surrounded by superior properties. Question number 14. A commercial investor purchases a warehouse for $1,620,000. The lender finances 75% of the purchase price. What is the buyer's down payment? A. $405,000. B. $1,215,000. C. $324,000. B. $1,215,000. C. D. $486,000. Correct answer. A. $405,000. A 25% down payment on $1,620,000 equals $405,000. Question number 15. A property owner signs a contract to sell land. Before closing, the owner dies. Assuming the contract is enforceable, which statement is generally correct? A. The contract automatically terminates. B. The buyer loses all contractual rights. C. The seller's estate generally remains bound by the contract. D. The broker becomes the property's owner. Correct answer. C-. The seller's estate generally remains bound by the contract. Valid contracts generally survive the seller's death and bind the estate. Question number 16. A title examiner discovers ownership records showing every properly recorded transfer from the original owner to the present owner without interruption. What has been verified? A marketable title, B, chain of title, C, actual notice, D, deed restriction. Correct answer, B, chain of title. The chain of title documents the continuous ownership history. Question number 17. A broker tells buyers, this community is perfect for families with young children. Which concern is most significant? A, RESPA violation. B, fair housing advertising concern. C, truth in lending violation. D, antitrust issue. Correct answer B, fair housing advertising concern. Advertising should avoid suggesting preferences for protected groups. Question number 18. A property owner verbally promises to sell a parcel of land next month, but no written agreement is ever signed. Which legal doctrine is most relevant? A, procuring cause. B, equitable conversion. C, statute of frauds. D, novation. Correct answer C, statute of frauds. Most contracts for the sale of real estate must generally be in writing. Question number 19. An appraiser determines an office building's value by estimating replacement cost, subtracting depreciation, and adding land value. Which appraisal approach is being used? A, sales comparison approach. B, income approach. C, gross rent multiplier approach. D, cost approach. Correct answer D, cost approach. The cost approach estimates value using replacement cost less depreciation plus land value. Question number 20. A homeowner grants a real estate attorney authority to negotiate only the purchase of one investment property. What type of agency relationship exists? A universal agency. B, general agency. C, special agency. D, dual agency. Correct answer C, special agency. Special agency grants authority limited to a specific transaction. Question number 21. A buyer signs a purchase agreement and later wants another buyer to assume both the rights and obligations under the contract. The seller agrees to release the original buyer from future liability. Which legal action has occurred? A, assignment. B, rescission. C, novation. D, subrogation. Correct answer C, novation. And novation substitutes a new party and releases the original party with everyone's consent. Question number 22. An appraiser determines that converting an outdated warehouse into modern office space would be legally permitted, financially feasible, and produce the greatest value. Which appraisal principle applies? A, contribution. B, highest and best use. C, conformity. D, progression. Correct answer, B, highest and best use. Highest and best use identifies the most profitable legally permissible use. Question number 23. A buyer notices an unrecorded driveway crossing the property that appears to serve the neighboring parcel. Even though nothing appears in the public records, what should the buyer understand? A, inquiry notice may require further investigation. B, the driveway automatically becomes the buyer's property. C, title insurance eliminates every possible dispute. D, recorded documents are unnecessary. Correct answer. A, inquiry notice may require additional investigation. Visible conditions may place buyers on inquiry notice before closing. Question number 24. A commercial property sells for $1,580,000. The lender finances 74% of the purchase price. How much is the buyer's down payment? A, $379,200. B, $1,169,200. C, $410,800. D, $316,000. Correct answer, C, $410,800. A 26% down payment on $1,580,000 equals $410,800. Question number 25. A homeowner promises to sell a parcel for $500,000 if a buyer decides to purchase within 15 days. The buyer pays consideration to keep the offer open. Which contract has been created? A. Bilateral contract. B. Listing agreement. C. Executed contract. D. Option contract. Correct answer D. Mine. Option contract. An option contract keeps an offer open for the agreed period in exchange for consideration. Question number 26. A commercial appraiser values an office building by estimating the present value of the future income it is expected to generate. Which appraisal approach is being used? A. Income approach. B. Cost approach. C. Sales comparison approach. D. Gross rent multiplier approach. Correct answer A. Income approach. The income approach estimates value based on anticipated income. Question number 27. A title examiner discovers that an earlier deed was properly recorded before every later transfer. Even though the current buyer never reviewed that deed, the law treats the buyer as having knowledge of it. Which legal concept applies? A. Inquiry notice. B. Constructive notice. C. Actual notice. D. Equitable conversion. Correct answer B. Constructive notice. Proper recording provides constructive notice to future purchasers. Question number 28. A property owner signs a listing agreement and later refuses to sell after receiving a full price offer that satisfies every contractual term. The broker sues for the agreed commission. What is the strongest legal argument? A. The seller automatically transferred ownership. B. The buyer became the legal owner upon making the offer. C. The broker earned the commission by producing a ready, willing, and able buyer. D. The listing agreement ended when the offer was presented. Correct answer C. The broker earned the commission by producing a ready, willing, and able buyer. Brokers generally earn a commission by producing a qualified buyer meeting the listing terms. Question number 29. A property owner installs custom shelving that is permanently attached to the walls of a residence. Which factor is generally most important when determining whether the shelving is a fixture? A. The original purchase price. B. The color of the shelving. C. The manufacturer's warranty. The method of attachment and the party's intent. Correct answers? D. The method of attachment and the party's intent. Courts generally emphasize attachment and intent when determining fixture status. Question number 30. A buyer asks whether an old industrial property may contain hazardous contamination before purchase. What is the broker's best response? Recommend an environmental site assessment by a qualified professional. B. Guarantee the property is free of contamination. C. State contamination is impossible because operations ended years ago. Advise skipping environmental inspections to reduce costs. Correct answer? A. Recommend an environmental site assessment by a qualified professional. Environmental concerns should be evaluated by qualified experts. Question number 31. A lender records its mortgage after another lender because it signed a subordination agreement. What is the primary effect? A. The second lender receives automatic ownership. B. The priority of the liens changes by agreement. C. The mortgage debt is canceled. D. The property becomes mortgage-free. Correct answer B. The priority of the liens changes by agreement. A subordination agreement changes lien priority without canceling the debt. Question number 32. An appraiser values a small home lower because it is surrounded by much older, poorly maintained properties. Which appraisal principle best explains this? A. Progression. B. Contribution. C. Regression. D. Conformity. Correct answer C. Regression. Superior properties may lose value when surrounded by inferior properties. Question number 33. A seller and buyer both sign a purchase agreement, the transaction has not yet closed, and neither party has completed every contractual obligation. The contract is best described as A. Executed contract, B. Void contract, C. Bilateral contract, D. Executory contract. Correct answer D. Executory contract. An executory contract has remaining obligations for one or both parties. Question number 34. A buyer purchases a commercial property for $1,760,000. The lender finances 81% of the purchase price. What is the buyer's down payment? A. $334,400. B. $425,600. $1,425,600. D. $299,200. Correct answer A. $334,400. A 19% down payment on $1,760,000 equals $334,400. Question number 35. A broker receives confidential information that a client is willing to increase an offer by $100,000 if necessary. Without authorization, the broker shares this information with the seller. Which fiduciary duty was most clearly violated? A. Disclosure. B. Accounting. C. Confidentiality. D. Reasonable care. Correct answer C. Confidentiality. Client negotiating strategies should remain confidential unless authorized. Question number 36. A buyer reviews public records before closing and discovers a recorded easement affecting the property. Under property law, the buyer is considered aware of the easement because of A. Inquiry notice, B. Constructive notice, C. Actual notice, D. Implied notice. Correct answer, B. Constructive notice. Properly recorded documents provide constructive notice to the public. Question number 37. A commercial appraiser estimates value by comparing the subject property with recently sold similar properties after adjusting for differences. Which appraisal approach is being applied? A. Income approach. B. Cost approach. C. Sales comparison approach. Gross rent multiplier. Correct answer C. Sales comparison approach. The sales comparison approach relies on adjusted comparable sales. Question number 38. A homeowner signs an agreement allowing another party to purchase the property at a fixed price within 45 days. During that period, the owner cannot revoke the offer. Which agreement is this? A. Listing agreement. B. Bilateral contract. C. Exclusive agency agreement. Option contract. Correct answer D. A. Option contract. Option contracts keep offers open for a specified period in exchange for consideration. Question number 39. A property owner permanently installs a built-in whole house generator connected to the electrical system. Unless excluded by contract, the generator is generally classified as A. Real property fixture. B. Personal property. C. Trade fixture. D. Chattel paper. Correct answer. A. Real property fixture. Permanently attached improvements generally become part of the real property. Question number 40. A lender refuses to fund a mortgage because the appraisal value is substantially below the agreed purchase price. What is the most likely reason? A. The title company rejected the deed. B. The lender wants a higher commission. C. The seller canceled the listing. D. The lender seeks adequate collateral for the loan. Correct answer D. The lender seeks adequate collateral for the loan. Lenders rely on appraised value to help secure the mortgage loan. Question number 41. A commercial property owner grants a tenant the exclusive right to purchase the property at a fixed price during the lease term. What contractual right has the tenant received? Right of first refusal. B. Purchase option C. exclusive agency, D, assignment. Correct answer, B. Purchase option A. Purchase option gives the tenant the right but not the obligation to buy. Question number 42. A buyer signs a purchase contract, but both parties later agree to cancel it and return to their original positions. Which legal remedy occurred? A, rescission, B, novation, C, assignment. D, specific performance. Correct answer, A, rescission. Rescission terminates the contract and restores the parties as nearly as possible to their original positions. Question number 43. An appraiser concludes a property's market value increases because neighboring homes are similar in quality, design, and maintenance. Which appraisal principle best explains this? A, regression, B, contribution, C, conformity, D, substitution. Correct answer, C. Conformity properties tend to retain value when they are consistent with surrounding properties. Question number 44. A buyer purchases a shopping center for $2,100,000. The lender finances 78% of the purchase price. What is the buyer's down payment? A, $462,000, B, $378,000, C, $1,638,000, $420,000. Correct answer, A, $462,000. A 22% down payment on $2,100,000 equals $462,000. Question number 45. A title search reveals an unrecorded easement that is obvious because utility poles and power lines cross the property. Before closing, what should the buyer understand? Visible conditions may create inquiry notice requiring further investigation. B, the easement is automatically invalid because it is unrecorded. C, the seller must remove the utility lines before closing. D, title insurance automatically eliminates every easement. Correct answer, A, visible conditions may create inquiry notice requiring further investigation. Obvious physical conditions may require buyers to investigate possible property rights. Question number 46. A borrower intentionally provides false employment records to obtain mortgage approval. Which legal issue is most directly involved? A, predatory lending, B, mortgage fraud, C, puffing, D, blockbusting. Correct answer, B, mortgage fraud. Knowingly providing false information during the loan process may constitute mortgage fraud. Question number 47. A seller refuses to transfer title after accepting a valid purchase agreement, even though the buyer has fully performed all contractual obligations. Which legal remedy is the buyer most likely to seek? A, liquidated damages, B, rescission, C, mediation only, D, specific performance. Correct answer, D, specific performance. Courts may order the sale of unique real property when monetary damages are inadequate. Question number 48. A lender requires a borrower to pay property taxes and homeowner's insurance through monthly payments collected with the mortgage. These funds are held in A, a brokerage operating account, B, a reserve fund, C, a personal savings account, D, an escrow account. Correct answer, D, an escrow account. Escrow accounts collect funds to pay future taxes and insurance premiums. Question number 49. A buyer reviews a title report and notices an easement benefiting a neighboring parcel. The easement will continue after closing because it A, automatically expires when ownership changes, B, exists only until the mortgage is paid, C, runs with the land, D, requires annual renewal. Correct answer, C, runs with the land. Appurtenant easements generally transfer with ownership of the affected property. Question number 50. A broker presents all written offers promptly and objectively, allowing the seller to evaluate each proposal without favoritism. Which fiduciary duty is the broker primarily fulfilling? A, loyalty, B, obedience, C, accounting, D, reasonable care. Correct answer, D, reasonable care. Brokers should exercise professional skill and diligence while carrying out lawful client instructions.
Hopefully you all enjoyed today's video. If you did, please do give it a like, and if you haven't already, make sure to subscribe to the channel. Also, take a moment to check out the other videos on the channel and be sure to turn on notifications so you never miss an update. Thank you so much everyone for watching.